Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, member CRE Entrepreneur shares his path from undergrad to working as a brokerage analyst. He covers his shift over to the portfolio management side of the business, why he enjoys real estate, how much his pay has gone up since he graduated 4 years ago, and what's in store for him next. Also, listen to hear what he's investing in now and who he feels is a good fit for real estate finance careers. Enjoy. All right, CRE Entrepreneur, thank you so much for joining the Wall Street Oasis podcast.
Yeah, absolutely. Thanks for having me on.
So it'd be great if you could just give the listeners a little background about where you come from.
Sure. So I'm from Pennsylvania. I live near the Philadelphia area, just outside the city. And that's kind of where I'm coming from location-wise.
And then, just a little bit of summary of your experience.
Sure. So out of undergrad, I knew that I wanted to work in real estate finance. I'd had some experiences during undergrad working as property manager and subcontractor to be involved in real estate, and quickly realized that was two parts of real estate I did not want to be involved in. Wanted to be more involved in the real estate finance side. From there, I was in a kind of a secondary market, not a lot of developers in my area that would necessitate hiring a full-time analyst.
Mm-hmm.
So there were really only two in my county where I lived. One did hotels, one did self-storage. I knew the guy with hotels growing up, but he wasn't hiring. He wasn't looking to bring on an analyst.
Mm-hmm.
But the self-storage guy was. So from there, that's how I got into the niche of self-storage.
Okay.
Specifically, that company was a development and brokerage company, and worked for them for a few years. Stop me if you have any questions. I know I cut you off there a little bit. Yeah.
Real quick, you said you knew what the first part wasn't for you. So when you were an undergrad, you were kind of tell me about that type of work and kind of how you even fell into thinking real estate might be something you like.
Yeah. So my undergrad experience was unique. I started college when I was 15. And
that's super early.
4 years. What's that?
That's super early.
Yeah. I mean, it was just kind of a unique opportunity that I had. And obviously some other things went by the wayside. Didn't get to do high school sports like I would have liked to, and did college instead. But from there, growing up in kind of one of the benefits that I had of growing up in kind of a relatively smaller community is I was a little more, I guess there were more job opportunities where I could get into roles that I really had no business in being in. I mean, as a property manager, I was 18 years old when I became a property manager for about 6 months, and it was kind of almost sort of an internship. And but at the same time, on my first day as property manager, my boss walked in and dropped a file on my desk with 5 people to file evictions on. So it was a very hands-on experience where I was dealing with all the things a property manager would for a pretty large mixed-use development. And from there, I quickly came to realize, what I don't want to do with my life is file evictions on people, handle utility bills,
mm-hmm.
make sure people have their rent in by the 5th of the month. Those were things that are really, really important. But I found myself more attracted to the development side, the acquisition side, the brokerage side of real estate.
So when you were in your undergrad and you had that, say 6-month internship, how did you even know about the other side of real estate? Was it just through talking with friends? Was it networking? Like, when did you say, because it's very different to be doing, working with a developer versus, being an analyst necessarily for like a larger real estate company. Do you know what I mean? So when did you think, was there a path, or was there a mentor? Was there somebody kind of that guided you early on?
That's a good question. So I have always had a interest in the built environment and in kind of the process of creating communities.
Mm-hmm.
And from there, I didn't have anybody that I knew growing up who was really involved in the real estate development process and kind of explained it to me. So I kind of, segued my way into it with this kind of ancillary jobs in construction and property management.
Mm-hmm.
And the people that I was working with in these smaller companies, I was working directly with the owners of these companies. So I was seeing them kind of put together a vision for the properties that they were working with, very creative
Mm-hmm.
renovations and reuses of properties. I was seeing them put together a vision, bring together a team, and make it happen. And from there, I looked at that and said that's more of the role that I want to have.
So more like the leadership role in a small firm where you're, not the one collecting, rent checks, like you said, or dealing with utility bills, but the one who's maybe leading a team of people kind of developing developing real estate rather than kind of working in it. Got it.
Yeah, and I've heard a developer compared to a conductor, where
Mm-hmm.
there's a lot of people doing a smaller part of the process, and the developer brings them together and makes sure the timelines all work together harmoniously. And that's something that I really aspire to.
Mm-hmm.
So that's where that role made more sense for me.
Do you feel like going to college so early, you started when you were 15, I assume you graduated around when you were 19? Did you feel that you didn't quite have the time for the internships and the exploration that you would have liked? Or do you feel like it was nice to kind of get working earlier? Like getting into the full
Yeah,
time?
it was a little bit of both. Had I gone a more traditional route, I think I really would have enjoyed doing formal internships and
or enjoyed college life.
Maybe interning.
You weren't even of drinking.
that?
You weren't even of drinking age when you graduated college.
No, yeah, exactly.
It's nuts.
So I also would have probably enjoyed having a college experience. I mean, I had definitely some of that after getting out of college, but definitely not living on campus or just off campus. So that's something that I would have enjoyed, but at the same time, I'm, a couple years ahead of where I would have been otherwise.
Fair enough. Okay, so you're kind of coming up toward graduation. Tell me about the recruiting process. Like, so did you have a job lined up after your junior summer? Was it like, were you unemployed for a little while after graduating? What was the process of kind of coming up toward graduation?
So in tertiary markets, like the one I was in, even in secondary markets, I think the process for finding a job as an analyst is very, very different than it would be in a primary or gateway market.
Mm-hmm.
And what I mean by that is that there is no recruiting process for small development companies. A lot of development companies in real estate have a pretty small number of people within their office. So there might not even be a full-time HR person dedicated to the function of, finding new analysts or associates or employees. So from there, the way I found my particular role was unique in that, maybe unique and maybe not that unique, in that I looked around for development companies in the area, narrowed it down to ones that would be large enough to actually, hire an analyst. If somebody's just developing an apartment building or two a year and working from their den in their house, they're not going to hire an analyst.
Right.
So they had to have some scale. And then from there, I reached out to them directly, walked into their offices, cold called essentially, and said, "This is who I am. I don't know if you're hiring for this role, but if you want to grow your company, here's how I can help you."
And what did you say? Like, what do you mean, here's how I can help you? You had a specific plan outlined or something?
Yeah. So analysts in real estate take care of a lot of the headaches that principals and higher level employees don't want to handle. So, it can be ultimately stuff as simple as data entry type functions for real estate or
Mm-hmm.
data collection for market analysis. And that's something where a lot of smaller real estate companies, development companies, they might not necessarily be thinking about how can I, offload this to someone else. But if the opportunity presents itself, that's something that is usually pretty attractive to them.
As long as you're cheap enough, right?
That's definitely part of it. But then you can also consider that depending on what their business model is, the fees that they can charge.
Right. So it sounds like
usually, yeah.
So it sounds like there was no real recruiting process. So when did you just start interviewing as you were approaching graduation? At a few places you were cold calling. When did you have your job, and how did that work?
Yeah. So I did interview as I was getting approaching my graduation. I mean, I probably started looking 4 to 6 months before graduating. Started looking in earnest. Mm-hmm. And narrowed it down and started talking and interviewing, and I had a job lined up probably about 2 months before I graduated.
Great. And then can you tell me about how big that firm was and what your role was there? I know it was more of a broker. You were more of a brokerage analyst or a broker analyst. Can you explain what that is versus the other stuff? Like what is a brokerage analyst?
That company was a self-storage brokerage and development company. Mm-hmm. So that's not an uncommon model for real estate because brokerage fees are subject to very high tax rates, essentially treated as income tax.
Okay.
Development is very tax favored, so it makes sense for a broker who might have really high levels of market knowledge to kind of protect some of that money, some of those brokerage commissions by rolling them into development.
Got it.
So the company that I worked for had So the role that I had essentially was supporting a brokerage team of 5 brokers as a sole analyst, mm-hmm. cranking together models, market analysis, and offering memorandums.
This is mostly for commercial, mostly for commercial real estate?
What's that?
This is for commercial real estate or properties that were
specifically for self-storage.
Got it. Okay. So stuff that was up for sale or stuff up for sale or stuff that was this company actually like breaking ground and doing the full development from buying the land and stuff like that all the way up through to sale or?
So the brokerage team was for sales, and we did both existing properties and land that was permitted for self-storage development.
Got it. Okay.
And then I also ended up doing some asset management work as well for the ownership side of the company.
So tell me how those two differ. Like, what are you doing on the brokerage side day to day versus what are you doing on the asset management side?
So brokerage side, you're cranking through tons of properties and tons of markets. Uh-huh. And that's pretty interesting because you get to see how hundreds of different operators run their properties, and you kind of get a feel for what works and what doesn't. Mm-hmm. And you also get a feel for what markets are doing well and which aren't. From there, asset management, you're working with the same, 15, 30 properties, whatever it is. You're working with the same properties every month, tracking metrics, trying to tweak the performance of the operations on the properties to help them perform better.
And those are the ones that are owned principally by the firm? Is that how you should think of it?
Sorry, what was that?
Those are the properties that are actually owned by the firm themselves? So like they're in the portfolio. Okay, so they're in the portfolio. They've either been developed or they've been purchased. They've been developed in-house or they've been purchased because the deal was seen as attractive at the time. It's like you're dealing with the portfolio of assets. So you're trying to figure out, like, looking at price, looking at competitor. I mean, what type of stuff are you looking at when you're trying to help these units do better?
Yeah, so asset management kind of works in tandem with property management. Yep. Property management, you have somebody at an HQ working with on-site property managers and handling a lot of functions like bookkeeping, HR, auditing, those kinds of things.
Yeah.
Making sure the properties are running smoothly. But from there, asset management kind of helps property management see the forest instead of just the individual trees.
Okay.
And what I mean by that is that asset management kind of pulls a lens out and says, here's the performance 6 months ago compared to last week. In property management, I would be looking week to week or month to month, and looking for longer term trends, looking for capital improvements that need to be made to properties, looking for any risk in the market that might be coming up or new opportunities that property management might just miss out on.
And so is this something you were trained on the job, or is it something like you had kind of done training, self-study for? How did you prepare for this? Or was it something you just learned on the job through watching the more senior brokers and the senior asset managers kind of do stuff?
So a lot of it was learned on the job. I had some pretty basic training through college for the financial analysis side of things.
Yep.
But real estate ends up being so specific into specific categories of real estate and how they're operated in different markets that a lot of it ends up being on the job anyways.
Right. Cool. And then, so you're there for a couple of years. Did you feel like this is a place you could build long term? What prompted the change? And then let's talk a little bit about where you are, I guess, now, right? And then what you're doing. And notice you're also getting a master's. So just the thought process behind that.
Yeah. So the reason I made the change from from self-storage to student housing, where I currently am, was just the opportunity to work with some bigger deals, kind of moving into some more complex transactions. In self-storage, a typical transaction size for an existing property is around $3.5 million.
Yep.
Ranging up to $15 to $20 million for a larger self-storage property.
Okay.
From there, on the student housing side, we wouldn't touch anything really below $20 million.
Okay.
And a lot of the assets we deal with are closer to $75 million is kind of a typical asset price. But I've also had the opportunity to work on some very large portfolios, ranging from $500 million to $5.8 billion. And in about 2 years, I've had the opportunity to work on about $20 billion worth of transactions. So it's been a big jump in terms of the complexity of projects I've been working on, the scale.
So that's fair. So is this new firm, the one you're at currently, it just has a much larger portfolio and a broader portfolio? Is that fair? Or is it all student housing?
Yeah, sorry, I didn't clarify. The firm I work for is primarily debt and equity placement company.
Okay.
As well as brokerage sales.
Okay.
So they do have some ownership, but their kind of bread and butter is a fee-based model where they're helping source funds for developers.
Got it. So it's still in their brokerage shop primarily, but they do have a portfolio.
Yeah, exactly.
Okay. So in terms of your balance, did you also start off kind of in the brokerage side there and then kind of start doing more of is that typical, like going from the brokerage side to then doing a little bit more of the asset management, the portfolio management? Or what's different?
So for the student housing side, I don't do a lot on asset management. I primarily do the debt and equity placement.
Okay.
But that ends up, again, being working on some fairly complex transactions where we're looking at.
So you're the broker. So you're like running a process to try and get buyers or, in place, or for example, so can you give me an example of like a typical deal, like who would bring you on or how it would work?
Yeah. So a typical deal might look something like this. A developer finds a site at a major university that they think would be great for student housing. Okay. They get it under contract, get approvals in place, and they have $1 million into it, and they're running low on cash because they have several other projects under contract. So they reach out to us and say, I have $1 million in this deal. It's a $20 million deal. Can you help us source the rest of the capital stack? From there, we might find them an equity partner with $4 million in a bank to loan $15 million on the property, and they would build it. Then they would come back to us in 2 years after it's built and fully leased, and they would say, we built this asset. The investor partner that you brought us wants out of the deal, so we want to sell it. Are you willing to help us sell this asset for $30 million? We would run through the sale process with them and then get them out of the property.
Got it. So explain just in terms of where your firm would capture value there. I assume it's just lining up the equity and debt you know,
Yeah.
helping them
Yep.
fill out the rest of as a broker, helping them fill out the rest of the capital stack so they can, you know, have the capital to complete the $20 million project, right? But what are you taking in terms of like fees? It's almost like you can think of it as real estate investment banking, right? Where you're just taking a cut of the transaction, or is it of the money raised? Is that how you necessarily think of it?
Yeah. So yeah, it is like investment banking where it's a small, a couple bips off of each deal.
Yep.
Depending on the size of the deal.
And so that's for both debt and equity. You guys have kind of probably relationships with banks, so you know kind of who to bring in on what types of deals, and then same thing on the equity side. And then so tell me, is that something that sounds like it's the main part of the business, right? For where you work right now, is that correct?
Versus that's definitely the main part of the business.
Okay.
And then from there, there's tax benefits from being a developer, where a lot of that fee income gets rolled into development.
Got it. And that's where the assets come, where you guys actually have some properties. You're always holding onto something.
Yeah, that's exactly right.
Got it. And so tell me a little bit about the skill set that you've developed that's been different from the first place with the self-storage, going to student housing. Has it been very different, or do you feel like a lot of the skills you learned at your first job were relevant?
So student housing is definitely more complex, and there's a couple reasons for that. Mm-hmm. But you start dealing with things like ground leases, retail leases. I mean, obviously in self-storage, you're not having retail leases, so student housing has that as a component. A lot of self-storage properties are purchased with friends and family money, mm-hmm. while student housing is much more institutional. So we do a lot of joint venture modeling for our clients.
Got it.
And that's just not something that you would necessarily do with self-storage, but you get a lot of in student housing.
Was there any training when you started this? Was there any training when you came in, or was it, again, kind of just learn by trial or learn by watching and on the job?
So a lot of that stuff was kind of self-taught before I arrived there. Mm-hmm. There's some great online courses. REFM has a great course for real estate. Mm-hmm. CCIM, I highly recommend the CCIM program and all of their courses.
Tell me what
they have some really great courses.
Tell me what that is. What's the CCIM?
Yeah, so that's called a Certified Commercial Investment Member. Mm-hmm. It's a nonprofit organization that essentially is geared around teaching real estate professionals.
Okay.
And
And so it teaches you the modeling, the basics, the fun, the theory behind it, and all that. It's like a certification.
So they dig into the modeling,
okay.
the finance side, the market analysis side, those major components of real estate analysis.
So what was the hardest part between jumping from the first position right at undergrad to the second one? Was there any thing that stood out that surprised you, besides the complexity of the deals?
I don't think there was anything that really surprised me. Mm-hmm. Going into my first job out of undergrad, it was a pretty steep learning curve.
Yeah.
Just, not being super familiar with Excel or with some of the other programs that I use on a daily basis. Mm-hmm. That was a big learning curve. Going from self-storage to student housing, you're kind of fundamentally talking about some of the same things, the same metrics for analyzing investments. So from there, it's just, a little bit of a more complicated model than I was working with before.
Got it. So it seems like you've been doing really well. You had a couple of years at your first place. You kind of went upstream, I'd say, to larger deals, more complex deals. I assume the pay has also bumped year over year or each year.
Absolutely. It's been very rewarding.
Can you tell me just rough ranges about what you were making kind of when you first came out to around where you are now? It doesn't have to be exact. And how much is that distributed base versus bonus for people who might be curious?
So initially as a analyst in a tertiary market for a niche asset class and not having kind of the background that you would look for, I was thinking around $40K a year. Mm-hmm. And that is
I'd assume it would be low right out of school. I wouldn't assume it's much more than that. Yeah. Okay.
And definitely at the time I wasn't, super happy about that. But it's one of those things where in real estate, as with many other industries, you're kind of expected to put in some time before you start to get rewarded.
Right.
From there, I've jumped to around 90K a year in my current position. And after I finish my master's program, probably going to be looking at associate's positions where I'll be closer to 130. Again, in secondary markets. If I move somewhere like San Francisco, New York, or Chicago, probably would be paid more.
So tell me, is there a reason you're staying in the secondary or tertiary markets? Do you feel like it's just a better lifestyle, or what's the thought process behind that?
I feel like it's a better lifestyle, maybe better value for your money as well. Some of it is just that being from Pennsylvania, kind of want to stay close to family and friends.
Yeah. That's fair.
But yeah, I mean, just as like a touch point, I get a very nice 1-bed, 1-bath apartment here near Philly for $1,250 a month.
Right.
So to get that same kind of apartment in like a garden style apartment setting in, say, New York City,
you're looking at $4,000 a month.
A big difference there in terms of your mileage.
Yeah, for sure. So you mentioned your master's. Tell me a little bit about the thought process. Are you working full time while getting this master's, or have you taken a break?
Yeah,
and
so
tell me about
full time while earning the master's.
Yeah, and tell me a little bit about this whole program, and is it common for people to go back to do a master's degree in real estate, and what does that even mean? Like, what are you learning there?
Sure. So historically, master's programs for real estate professionals have been pretty limited. And so people have either gone back for an MBA or a master's in urban planning.
Okay.
But from there's been growth in master's programs at pretty good schools over the last few years, last 2 decades, let's call it.
Okay.
And their schools include, without getting into that, the program that I'm attending is at Georgetown University. And they offer the program in person or online. And I looked at the numbers, decided to do it online. It's a 2-year program, and I'm able to do it while keeping a job.
That's great. And so are you doing it like at night? Is your schedule just kind of becoming more tight and more difficult? Or is it is it paced? Like you have to attend live classes, or how does that even work?
It's not that bad. Typically with my day job, I'm working between 50 to 60 hours a week.
Okay.
And then on the classwork side for a master's program, I'm putting in another 10 to 20 hours a week. So it's not a workload that bothers me. It might be a bit much for some people, but it's obviously, you talk to a lot of people in investment banking, that's not even, that's a good week for them.
Does it ever scale up? I assume when you're near a deal, do you ever feel like you have to put in 60, 70 hour weeks at your firm, or is it pretty consistent, like 40 to 50, 50 to 60, 55 in a bad week or 60 in a bad week?
So it really depends on the week. There's definitely been weeks where it's been 40 hours in the morning, work through whatever I'm working on and out at 5. And that's a great week. Last night I worked till 10:30. So it just kind of depends on what projects are coming in and, how fast we have to get through them.
What's the plan, once you have this master's? Do you think maybe you're going to stay at the same firm? Is there growth potential there? Or is it something where having that master's degree now opens up a lot more doors?
So the plan after I finish the master's degree, or even while I'm working on it, is to get a position as an associate at either a development company or investment company for real estate, where I'd be on the development or acquisition side. From there, already engaging in networking, working through contacts that I've developed in the last few years, working in real estate, and kind of looking for that next opportunity.
So how would you suggest people prepare for like these types of interviews? You just have a passion for real estate, and obviously you've worked now in the industry for about 4 years. So you have that knowledge, you have a little bit of that network. Have you been aggressive personally, kind of building that network outside of the people you've worked with? Like, have you been, or in a specific region, or have you kind of just let it come naturally?
It's been a little bit of both. I mean,
Mm-hmm.
the one thing that I've been very aggressive on is education and pouring money and time into education. I earned the CCM designation. I spent a lot of time on some of the different online courses that are out there, like REFM,
Mm-hmm.
and obviously working a master's degree now. So I spent a lot of time and money on education, and from there, you develop some great networks through education.
Mm-hmm.
And when you're getting into that niche, industry-specific education, you definitely develop some good contacts. From there, I found that, at least in my area, generally speaking, real estate industry mixers are more or less a waste of time. So I wouldn't necessarily spend a lot of time on those.
Why do you think that?
If anything,
why do you say that?
yeah, I mean,
Or what's been your
I
experience
think
that makes you say that?
so for real estate mixers, there's a few people who might attend who are kind of at the top of the food pyramid in terms of they are high net worth individuals who own a significant amount of real estate and
Mm-hmm.
might have a real estate firm.
Yep.
And those are kind of the people that everybody else wants to talk to.
Fair.
And from there, you have people like me who are, analysts and associates. It's nice to talk to other analysts and associates, but it's, not super helpful.
Mm-hmm.
And then you have industry vendors, people who offer ancillary services to real estate operators and owners. And it's not really helpful at all to talk to them. It's even less helpful. So
okay, that's fair.
From there, it's one of those things where, I've found I get a lot more benefit out of asking one of those individuals, one of those owners, to just, meet for coffee or something like that.
Mm-hmm.
It's easier just to cold call them and ask to meet in person.
And has that worked? Has that worked for you?
Catch them at a mixer.
Has that worked for you? And are you like doing this through LinkedIn? How are you actually like reaching out to people?
Yeah, so do it through LinkedIn, and kind of sometimes it helps to maybe go to the mixer so that you meet them once, shake their hands, and then follow up with them on LinkedIn and say, hey, I met you last weekend at this mixer.
Right.
Is there any chance I can meet you for a half hour by wherever you are, and make it easy for them? And yeah.
And then what's the purpose of those conversations? Just to build a relationship a little bit more, so potentially down the road it could lead to a job, or is it just building relationships?
So every time I go into one of those conversations, I try to have some talking points for some things to ask them that I can't easily Google.
Mm-hmm.
And what I mean by that is, I don't want to ask them, what do you think of retail as an investment right now? Something like that I can Google, or that's too vague. But if I can ask them something more specific about, hey, I looked on your website and I saw that you bought this specific asset and you turn it around in 4 years, and you have your purchase price and your exit price, and the exit price is way higher. Tell me what you did there. I'm just curious. Usually people who have been really successful in real estate really enjoy talking about it. So that is a pretty good learning experience in and of itself.
So you're doing it really just to actually learn about the deals, or you're doing it to build relationships, or both?
A little bit of both.
Yeah.
I think that anybody getting into real estate kind of quickly realizes that there's some very, very, very large firms in real estate, and then there are a whole lot of entrepreneurs. And there's really two types of people in real estate finance: the kind of people who want to go work for the Blackstones of the world, and the kind of people who want to eventually own real estate themselves. So,
and which one are you?
Yeah, I'm definitely in the second camp.
Got it. So if we think of, when people say real estate investment banking, real estate private equity, that's nothing that never really interested you. You've always been more interested in working for developers, kind of on the ground, and being an analyst.
Yeah, I really enjoy the finance aspect of it. I really enjoy digging into models and figuring out how to create complex models that show someone else what the results of a project are.
Mm-hmm.
But at the end of the day, what is really rewarding is building places. Putting together projects where there's a piece of dirt or an old building that was underutilized and finding a way to make it somewhere that people want to be.
Mm-hmm. Very cool. And do you feel like, I guess, your path now is in terms of like next steps, when you said you want to have an associate position, how should I think of that? Is it similar type of analysis you'd be doing, or you'd have analysts underneath you working, or how still doing debt and equity placements? Is that what you're thinking? Just maybe at a larger shop?
Yeah, no. So yeah, what I'm interested in doing is working more or less directly underneath the developer and helping them source sites to develop, or working under someone who buys existing properties and helping them find properties to buy. And kind of searching. I mean, what I really enjoy about that kind of work is that you're combining market analysis with financial analysis.
Yeah,
and those two things interact with each other so closely and affect each other so closely that it ends up being a bit of an art and a science.
Do you feel like now that you've kind of worked in two distinct niches, so you did the storage and then you did the student housing, do you feel like you could branch to another, or do you feel like you're kind of limited and need to stay in one of those two?
I definitely don't feel limited at this point, but if anything, that would be due to the work that I've done on the education side. I mean, the master's program with Georgetown is very focused on exposing you to different kinds of assets.
Okay.
So I did a market analysis class at Georgetown and learned how to do market analysis for office, resorts / hotels, multifamily, retail,
Oh, wow.
and industrial properties. So it kind of gives me a broad base to work off of.
Very cool. Do you feel like you'd obviously probably still learn a lot on the job if you did join one of those other types, but obviously it just gives you a base to feel confident in an interview. Is there a lot of interview prep through this master program, or like they're prepping you for the job, or is that kind of you're expected to go out on your own? Like, is there any sort of on-campus presence where firms are coming to interview, or developers, or like that mid-level that you'd be interested in?
I don't think there is. I think in real estate, as an industry, it's really up to you as an individual to find a career path, kind of through networking, through cold calling, through keeping in touch with people who might have opportunities. Fair
enough. So, do you feel like your current position will be there for as long as you want it, or let's say you go through this master's program and you're not finding the position that's ideal, or let's say we go through a recession, and there's just less positions open and real estate takes a little bit of a dip. Is it something where you feel, or like there's less transactions happening? Would you feel safe at your current place, or would you feel like there's room for you to grow in case, or are you confident that you could kind of find something?
Yeah, to kind of answer that, I definitely feel comfortable that they would, even if there was a period where the fees they were bringing in weren't supporting their expenses. I mean, keep in mind their expense ratio is going to be pretty good for a brokerage team, because you've got salaries, some office space, and travel expenses. So from there, I feel pretty confident that they would keep me on as long as I needed to be on, as long as I was showing up to work and doing a good job.
Yeah. I'm just curious what happened to firms like this, back in the financial crisis. I'm wondering, was it like did everyone either just tighten their belts and obviously no bonuses and keep most people, or did people lose their jobs? That's what I'm trying to get to is what's the, is it really cyclical, or at these smaller shops, is it a little more insulated, just because they have their little niche and their assets are kind of chugging along and doing okay and insulated a little bit more?
So it kind of depends on the individual company, and it depends on the role that you're in. For example, if you're in asset management, you're probably safe. You're probably one of the last few jobs to go in terms of real estate, because you're kind of performing pretty integral ongoing maintenance on properties in terms of their financials and performance.
Right.
So that's one of the last things you're going to cut as an owner.
Right.
On the other hand, if you're in development, that might be one of the first things they cut.
Because they're like, it's just, there's
as
not
far
going to be
as
enough.
I know.
Yeah.
What's that?
There's just not going to be enough development going on or whatnot, let's say in a recession.
Yeah, but it's also one of those things where you think about the last recession, 2008, everything, liquidity crunch, everything kind of locked up. And there were definitely developers that lost their shirts. In that case, there were definitely a lot of developers that had to work through with banks some of their loans to keep them from getting foreclosed on.
Yep.
But from there, if you're in that position, you want to be well positioned to re-enter the market when there is liquidity and capital available again.
Yep.
And at the same time, there's also very opportunistic real estate owners who buy a lot during recessions. I mean, probably the second most famous real estate personality is Sam Zell, and that's how he's made his legacy is buying during recessions.
Yeah, for sure. Lots of opportunity if you have the capital to deploy, right? At the right time.
Yeah.
Cool. Well, anything else before we call it that you'd like to share with the younger listeners that may be thinking of a career in real estate?
Yeah, I mean, it's a very rewarding career in terms of the kind of projects you get to work on are very interesting. I will say it's definitely, as you kind of alluded to, less of an ultra secure,
proven path
kind of job with an easy path and a clearly defined path. It's a very undefined path. But if you have an entrepreneurial personality, real estate is one of those industries that works really well with that type of personality.
Got it. Fair enough. We'll leave it at that. I think I couldn't agree more. I think it's interesting. My cousin's doing a lot of real estate right now, investing, and it's perfect for him. I think he's found his calling. So thanks so much for being on the podcast today. It was really, really interesting. And thanks for educating me as well.
Yeah, absolutely. I appreciate it.
Cool, man.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, patrick@wallstreetoasis.com. And until next time.